Sharia compliance as unique risk in Islamic bank. Islamic bank, being a financial institution, are exposed to the same risks like conventional banking. The risks that are exposed by Islamic banks are rate of return risk, displaced commercial risk, credit or market risk, liquidity risk, as well as operational risk. However, being a financial institution that operate Islamic banking and finance operations, Islamic financial institutions are exposed to different types of risks. Islamic financial institutions are exposed to special risks such as Sharia compliance risks that arise from the failure to comply with the Sharia principles. What is risk? Risk in the context of financial institutions or bank refers to uncertain future events that may influence the achievement of the financial institution's objectives, including the strategic, operational, financial, and compliance objectives. It also refers to the possibility that an event will occur and adversely affect the achievement of an objective. And in the context of Islamic financial institutions or an Islamic bank, it refers to the possibility that the event that is non-Sharia compliant event that occur in the operation of Islamic banking and finance and therefore renders the operations of Islamic banking and finance not valid. What is risk from Sharia perspective? From the Sharia perspective, the word risk refers to the word mukhatara in Arabic. It refers to fear of destruction or impending doom. In the context of Islamic banking and finance, the risk can be of three different types. Number one is the permissible risk. The permissible risk refers to the risk that must be borne by the parties to achieve the profit from the contract. The parties in this context are the customer and the bank. Number two is the non-permissible risk. This refers to the risk resulted from unjust consumption of the property in the contract. And last but not least is the manageable risk. The manageable risk refers to the risk that is permissible but is to be avoided due to the negative effect to the parties. Sharia risk versus Sharia non-compliant risk. Now, the question is that whether Sharia risk is similar to Sharia non-compliant risk. So here, there are two important words that we need to take into consideration. That is Sharia risk and Sharia non-compliant risk. The literature does not provide a proper and comprehensive definition of what Sharia risk is. The regulatory framework only describes on Sharia non-compliance risk that is provided in the Malaysian context in the Sharia governance framework. Now, however, in this situation, in the context of Islamic banking and finance, Sharia may also become a risk to Islamic financial institutions. What are the possible Sharia risks to the financial institution? So, those risks may cover the risks such as non-compliance, fiduciary risks, as well as others. The possible Sharia risks that may be faced by the financial institutions, or in particular Islamic financial institutions, are the Sharia non-compliance risk, the credit risk, operational risk, counterparty risk, as well as market risk. What are the effects of Sharia non-compliance events that occur in Islamic bank or Islamic financial institutions? The Sharia non-compliant may result from the failure of the Islamic financial institutions in anticipating, identifying, assessing, and managing the unique risks arising from the implementing Sharia-approved contracts. Similarly, The Sharia non-compliant also may occur in the case where Islamic financial institutions fail in anticipating, identifying, assessing and managing the impact of the Sharia non-compliant events that change the profile of the unique risk. The result of this Sharia non-compliant event may have a direct impact to the earnings, either the present earning and the future earnings of the financial institutions because it resulted to the defective contracts. So, we can summarize that the significant effect of the Sharia non-compliant events that occur in the financial institutions may affect the validity and enforceability of the contracts. How do we measure the Sharia non-compliance risk? Generally, Sharia non-compliance risk can be divided into 3 types. Number 1 is the severe. Number 2 is the medium Sharia non-compliance risk. And last but not least is the tolerable Sharia non-compliance. Let me explain one by one what does it mean by severe, medium and tolerable. Now, the severe Sharia non-compliance risks refer to any events that lead to the invalidation of the contract and thus non-recognition of the income by the Islamic bank or financial institution. What are the examples? The example here is that when Islamic financial institutions provide financing for gambling activities or investment in production of alcoholic and liquor. Now, the medium Sharia non-compliance risk refers to the defective contract that hinders the contract to be enforced. Example of Sharia non-compliance risks that are considered as a medium is that when the contract have invalid conditions, such as the problems with the delivery of the subject matter, or where the contract provide insufficient information about the subject matter. The least Sharia non-compliance risk is called tolerable Sharia non-compliance risk. What tolerable Sharia non-compliance risk here refers to the events that do not lead to the consequences mentioned under the severe or medium, means that it may not affect invalidation of the contract as well as it may not also hinder enforceability of the contract. What are the examples of tolerable Sharia non-compliance risks? A simple example of tolerable non-compliance risks are improper and misleading advertisement by the Sharia or Islamic bank. Let me then explain on how the Sharia non-compliant risk may affect Islamic bank. The diagram shows or illustrates the examples of Sharia non-compliant risk. We go into the first examples of unclear pricing formula that is considered as a medium risk from the Sharia perspective. The same thing, however, in the context of financial, that may affect or the effect of those risks is that very low in terms of the financial implication. Okay. The next example is interconditional in Bai'ul Inah personal financing. When we talk about personal financing here, we are focusing on the amount of money provided by the bank which is not very substantial. The intercondition in Bai'ul Inah financing from the Sharia perspective is considered as a severe condition which may affect the validity of the contract. However, on the financial impact to the Islamic bank, it may be low because the amount involved here is very small. The last example here is the use of improper terminology such as the word interest in corporate financing contract. From the Sharia perspective, the use of improper words such as interest and riba may not be severe, but rather than it is considered as low because it can easily be replaced by the word profit. However, in the context of financial implication, it can be a very severe effect to the financial institutions because it may involve a very big amount in the corporate financing contracts. Islamic financial institutions or Islamic bank must mitigate Sharia non-compliance risks. This illustration gives you the explanation on how and what should be done by the Islamic banks in order to mitigate the Sharia non-compliance risk. All the issues or the examples that I did mention earlier, such as unclear pricing formula, interconditional in-by-ul-inah personal financing, and the use of improper terminology such as the word interest in the corporate financing contract have to be properly mitigated by having a proper rectification that may result to the effect to the financial institutions that in the first two cases, interconditional as well as the unclear pricing formula, there are still the implication in the financial impact, but it have been rectified in the terms of Sharia perspective. Then the same thing goes to the third situation where the word riba is used in the financing contract. At the end of the day, the Sharia perspective have been rectified by virtue of the financial institutions making a proper rectification of the Sharia, but there are also possibility for the financial institution or Islamic bank to bear the risk or in terms of the financial implication.